Hey, what's up, man? Yo, yo, what's up, guys? Let's give it a few more minutes and then we're just gonna. This call is just on a weekly prep. All right, so we could get prepared for the week. Tomorrow's gonna be important too. You can hear me okay? All right, get it started in like another 5 minutes. All right, cool. All right, so let's start this off with last week because last week we did have the Bank of England's rate decision. So I understand, like, if most of the people they just look at the actual print, and when it comes out, like you see that they cut rates by 25 basis points, automatically people is looking to sell, right? Sell that currency. But it's important to understand about forward guidance. And this is on YouTube. I did do a video on how to trade rate decisions. So hopefully it is very helpful for you guys that when you're trading the print, it either has to be a surprise or you have to focus on forward guidance. But for the Bank of England last week, they did cut rates by 25 basis points, which was expected. Okay. So the rate decision itself didn't really give us any clear edge. But what really mattered, especially for you guys in the UK, if you're focusing on trading the pound currency or the UK 100, right? What really mattered is the vote split. So the Bank of England members, how many of them are actually voting for a cut? How many of them is actually voting for a pause? What gave pound strength last week was that the number was expected to be 7 for a cut and 2 for a pause. But what was the surprise is that we see today there was a 5-4 margin. So more members actually voted for a pause, and this was because the Bank of England was showing caution on future inflation spikes, right? So that precaution that they're taking, expecting that inflation is going to rise. This is why majority of the members was actually pausing rates. And the reaction of this, that we saw that the pound currency gained strength and we saw a drop in the FTSE 100. Okay, so that was a hawkish reaction. So this is what really matters when you're focusing on the Bank of England, guys. All right. So monetary policy wise, this is where we be looking for that pound strength moving forward. So last week we also had Swiss inflation. I know most of you don't trade Swiss, but it's good to like focus on it just so you could just get good at understanding how to trade fundamentals, right? How to focus on these news headlines, right? How to focus on economic data. So when it's coming around with Swiss inflation, core inflation uh, is actually rising, right? So it rose about 2%. the higher inflation is going, along with the tariffs that we're seeing that is being implemented with the United States, the White House, that is causing a little downside growth when it comes to the SNB, right? Because you're getting higher inflation, and then now we're getting hit with tariffs with the US. With high inflation, the way they combat that is raising interest rates. They're not going to want to do that if they're dealing with a downside risk of growth because of the unexpected. Well, obviously afterwards Trump did come out and say that it's not true, so most likely we need more detail about him putting tariffs on gold, on Swiss gold. But him saying that it's not true, it does gives a breather for the Swiss currency. For you guys that look at the CHF currency, that's something that you want to focus on moving forward, right? So what we're going to focus on this week, and if you guys have any questions, just write it down and I got you. So today we're going to have the RBA rate decision. This is going to impact the AUD currency. So it's anticipated that they are most likely going to cut rates by 25 basis points, which is, again, already expected, right? But in the bottom right here, recent data driving the outlook, right? Why are they going to look for cutting rates? This is why it's important to pay attention to economic data, right? The more you focus on economic data, it gives you a bias, right? It gives you an idea which direction the currency will go, which direction the central bank members is going to go. Because a headline CPI dropped 2.1% in June's quarter, the lowest reading in 4 years, right? Also, we see trimmed inflation is also easing. Other things is unemployment. We got a rise in unemployment, but the only problem is wage growth, which we do have tomorrow for Australia. But seeing a drop in inflation, seeing a rise in unemployment, it's every single signal for us to be expecting more of a dovish reaction for this next RBA meeting. All right, so this is why I like the idea of a weaker AUD currency from a longer term perspective, right? But we obviously need them to actually confirm it. So now the main focus is going to be this week is US CPI, all right? So this week's CPI, it's going to, I can't wait for it because it's going to give us the edge that we're looking for with a direction, because we got the next rate decision at the end of this month. Whatever the CPI goes, if it comes out higher or lower, that should probably determine a direction for probably for the rest of the week. So let me just read it out for you guys. This week ahead, we define July's consumer price index, right? The key data point that could set the tone for the Fed's next move. Also setting the US dollar's direction and short term for the equity markets. Why this matters? Because this is definitely going to set the idea if we're going to see Jerome Powell finally give us a cut, or is he finally going to give us a pause, right? So that's why it's more important to focus on it. But I want you guys to, right here, just try to take a screenshot or just take notes so you could have the reactions of the markets when that event comes out, so you guys could be able to understand what to look out for. So if CPI comes out weaker than expected, this is going to most likely push equities higher. And most likely we're going to see the bonds, no more majority, I don't trade that, but you're going to see equities push higher. You're going to see the US dollar and the bond yields push lower. Okay. If we get a weaker than expected print, right? If CPI comes out higher than expected, we're going to most likely see equities push lower. Then we're going to see strength in the US dollar. We're going to see strength in the US yields. Okay, so this is just going to give you a bias based upon if we get a higher print or a lower print, so you guys are not caught by surprise. If this CPI print doesn't give us an edge, meaning if we see that the monthly is as expected, or we see the monthly is higher, the yearly is lower, and we don't see no clear edge, it's most likely going to really mess up the whole week. It's going to probably mess up this month, to tell you the truth, because we really want an edge from this print in order for us to be able to take advantage of a clear opportunity for the rest of the week heading towards the next rate decision. This one is going to be important. All right. So hopefully we get something clear. Now, we did get some headlines between Russia and Ukraine. Supposedly they're going to end the war. This, I don't expect them ending the war is going to give us the best tradable edge. What will give us an edge is if Putin decides not to ceasefire. So if he decides not to ceasefire, that's going to be our opportunity. That's where the best tradable opportunities is going to come. All right, just my opinion. When we dealing with geopolitical tensions, it's going to be quick. I put in my bets on that there probably will be some sort of an agreement. I don't know what you guys think, but it seems like Putin loves to pop shit, right? And it looks like Zelensky is all down for the ceasefire, but it's all in Russia's hands, and it looks like they want their territory. So I don't know how it's going to go, if it will go, but it definitely is going to be interesting to find out. Now, upcoming events. Okay, so for this week, just screenshot it. I made a mistake here on Tuesday. This is 8:30 for US CPI, but just take a screenshot. These are going to be the opportunities we're going to be looking for this week. All right, so I'm going to pause here if you guys have any questions so far, and I'll read through your questions. Yeah, so major news this month is right there. So that's what's going to be important. It's the month of August. Should markets slow, low volatility and liquidity? I mean, it depends. Like that's why I'm Mills focusing more on this print, because it's going to depend on what happens with CPI. And we also got US PPI on Thursday. That's another inflationary print, but it's really going to depend on this actual print. That's what's going to really determine the direction we're going to go. And also, I know at the end of I think on the 5th, I think for the stock market, the expirations for options is there for Friday, and that's also when they're supposed to talk with Putin. So that should give some volume too on that Friday. But yeah, if you guys are good, just put a 1 in the chat. If you guys have questions so far, let me know before I move forward. What's up, Jesse? All right, so Tuesday, the RBA rate decision. I am going to go live with the group to this, and then also we're going to have US CPI. All right, so it's going to be a very long day tomorrow. So I'm expecting some good opportunities. Like I just explained earlier, I want to see a cut, and I want to see dovish guidance for the RBA. I want to take advantage of some weakness. And I think a good pair to pair that against is GBP/AUD, right? Because last week we had the pounds rate decision, and it was also hawkish. So if this one we get a dovish policy, right, for the RBA, I think taking GBP/AUD buys would be the best bet. And then Tuesday, US CPI. So if you guys are trading dollar, gold, or US equities, you're going to want to focus on that at 8:30. Then for the rest of the week, I would say, yeah, like if you're trading AUD, you could focus on that. On AUD employment is also good, but for the pound, UK GDP data is also a good one, and that's going to be at 2. Okay, so that's really it. Thursday we also have the US PPI data, another inflationary print, and then is this Echo? Hold on. How about now? It's still echoing? Test, test, test. Is it good? All right, thank you. All right, cool. All right, so that's what we're going to focus on this week. All right, so it's going to start off with US CPI. And whatever direction we get for that, that's going to set the tone for dollar equities or even gold, most likely. So just wait for that to give us an edge. If it doesn't give us an edge, then we do have US PPI that's on Thursday. It is inflation, but it's not as important as CPI. And then on Friday, we have US retail sales, which some way, somehow, US markets actually care about retail sales. All right. So this is how you find an edge. Okay. Looking at these data points, depending on the direction of the data that we have here, could lead to some opportunities for those currency pairs. right? So if you're trading the pound like GJ or GBP USD, right, you're going to focus on US CPI, UK GDP data. All right. So don't try to ignore it. When these opportunities come, you just want a clear edge. All right, guys. And I try my best, like before the print, give you guys some opportunities, like just to really focus on. And what really matters to most is, this is why I like this, because if you, some of the websites that you are using, they don't give you the high and the low expectation. And this is where the surprises actually come from, right? Because these are just institutions given their expectations or on where they expect data is going to go, right? So looking at an example like core, like right here, core CPI year to year on Forex Factory, you're probably going to get that 3%, right? It's already expected that inflation is going to rise. It's already expected. Jerome Powell already confirmed it. Like he's expecting a short impulse higher of inflation due to tariffs. But if we start going above that 3.2%, right, that's where we're going to get the surprise. That's where we get those volatile market moves. That's where we supposed to look for that clear edge. Okay. But knowing that this is CPI, I think if we get, yeah, like if we even get the 3% or 3.1, I think we're going to see a very strong reaction on the dollar. I think it's going to be extremely important for us to focus on. But at least you could just see the difference, right? Because this is what a lot of people are missing out on. Because when you're looking at a regular website, if you're just looking at the 3%, and it comes out like, but this is inflation, but just use it as an example. If it comes out at a 3.1, it shows on a website that is green, but it's not a surprise. So sometimes when you take the trade, you say, hey, this is supposed to strengthen the currency. How come it strengthened a little bit and then it recovered? And it's because it didn't really surprise the markets. It didn't give them an edge, right? It's not sparking the algorithms. So that's why the high and the low is super important. And that's really what we focus on for the session. All right. So that's really what I want to get with. But today, I think we had we did have some shit that came on with Trump today. So he did sign executive orders extending China's deadline by 90 days. Yeah, I was picking up my kid when this headline came out, but I do it. The problem is that gold is like gold is already dropping, definitely. Gold is already dropping, right? Because the extension of the tariffs, usually before when we was getting tariff headlines, that was the main trigger for gold, right? When we saw that China and the US was actually causing a lot of tensions with each other, that was the reason why we started seeing gold spike up higher. Now, the fact that we see that they're actually trying to make negotiations, like obviously, I still think it's all about the details behind the details behind the tariffs. Like, what are they actually going to work on, right? What is actually going to happen? I personally think they're just going to wait I just think they're going to wait the 4 years until Trump is out of office. I feel like that's what's just going to happen. It's just going to be a stalling tactic for the next 4 years. I think Trump is going to get pissed and he's going to try to go to war with them, because I don't feel like China is going to bend over. I feel like they're going to wait until we just get another president to come in place. But what we're going to focus on, right? If we continue to get positive tariffs, have you guys taken any trades so far during tariff headlines? Like now is a lot different, because in the beginning of the year, it was freaking easy, man. Like everybody in the group, that's all they was doing was just buying gold all the way from like January to about April. Like it was just buys on gold, probably longer than that. Probably till like now is just when we started seeing a little bit of the shift. But usually what happens is Trump, I feel like they know about the stock market, because a lot of his headlines that is market moving comes out at 4 p.m. Like right now, the markets are closed. This is usually when we're going to start seeing some headlines coming in, because when the stock market's closed, like if you look at equities, like typically what's going to happen is it's going to close at whatever number it is for the day, right? So like the fact that we got this drop, I'm not expecting much to happen, because like CPI is tomorrow. So that's where I want to look for my opportunity. But he does this on purpose, because his headlines, right, the algorithm stop, the trading stop. The only thing that is open is aftermarket trading. So he does this purposely, that he put out those headlines at 4 p.m. just to not directly impact the markets. I hate that shit. That's what really messed up this whole year when it comes to volume. Like a lot of the opportunities is leaning more towards Asian session. So that's what switched me to actually wanting to trade gold more, because like right now with this 90-day pause, I like the sells on gold. I think that is going to lead to a really good opportunity, right? So I'm only short-term sells on gold. I'm not a long-term, I don't have long-term expectations on sells on gold, right? I think that we're going to probably see a correction, because just look at the daily time frame. Just show you guys, right? You could just see, like, sorry, this is just the analysis I do with the group, but you could just see in the daily time frame just the consolidation that we're having at the highs, right? And this is like really what came in at April, at the high of April. This is when the market started to not fear tariffs as much. So once that came into place, gold actually stopped pushing higher. So I'm thinking that we're going to get a bit of a correction on gold to push lower again before we can start looking for those actual, just get back into buy structure. So what you're going to have to focus on is if we see that tariffs are actually easing, what we need is no countries trying to retaliate with the US. That's the main goal. But if we see that countries start to retaliate, that's when we're going to have to start getting nervous, because most likely if like Europe, China, and like and Canada all group together, and Mexico group together and say, nope, this is some bullshit, we're going to do this against the US, we're going to stop it. That's when we're going to start looking for those buys on gold again. But if we see that tariff talks is just positive, there's no animosity happening, most likely we're going to start seeing gold actually cool off from those highs. And I could see a lot of profit taking is happening from these highs too. But Mike, the key zones I would say to look out for that we could pull back to is like around 3,300. You know, that I think that's going to be a really good key area that we could fall to. But depending on what happens tomorrow, right? If we get higher inflation, this is what's going to lead gold to actually push lower. But I'm looking at that for better opportunities for buys. And the same thing for the equity markets, right? I'm not a long-term seller in NASDAQ. I'm not going to be a long-term seller in US 30. Hold on, let me see how this looks for you guys. Yeah, because you know how much money they putting into AI? You know, like, gosh, man, they're putting so much money into AI. It just doesn't make sense. So it's no reason to be looking for long-term sells on NASDAQ or US 30. But depending on what happens tomorrow, if we get higher inflation, that is going to spike equities lower. But when we see price push lower, it's just going to lead to better areas to actually take buys from. Because as long as the US economy is still strong, right? As long as we still continuing to see good labor data, as we've been seeing so far, unemployment is staying below 5%. Like as long as we see good growth, there's no real reasons to be looking for long-term sells in the stock market. No long-term sells in equities. But if we do get some pullbacks, your eyes better light up, because that's what's going to lead to some really good opportunities to get back into some buys, right? As long as things remain the same. The only way I could see downside in equities is if we get recessionary fears. And I personally don't think that we're going to see that anytime soon. How do you factor in core CPI versus headline CPI when developing your trading strategy? It all matters. There's no separate one or the other. It all matters. So you want to see all the prints, headline and core CPI coming out lower, all lower. So it all has to come out red, or it all has to come out green or higher. So like, that's what I mean about having an edge. So you want to see those prints remain the same. That's how you could really determine which direction the markets is going to go. All right. So it's just not one or the other. But the focus, obviously, just to go to detail, like what the central banks focus on, like the Feds, they focus on core, because that's what they can control. They can't control headline CPI, but they control core. So core year to year is actually their focus. All right, guys. So I want to do a quick update to you. Hopefully this was cool. I just wanted to test this out to see how it goes. But if you guys have any questions, ask now, and I'll probably see you guys later. Like I try to do an update for you guys probably tomorrow for CPI if I have time. Is gold going to cut rates next month? Is gold going to cut rates? No, no. Gold don't cut rates. It's just central banks. Like gold is a safe haven commodity, so it doesn't. It's about yeah, that was new. Like because the gold is traded is against the dollar. So usually whatever happens with the dollar, like if the dollar pushes higher, it gives you confluence that gold will push lower. So gold does the opposite of the dollar of DXY. Yeah, have a good one, Jay. I trade UJ gold, risk on, risk on. Yeah, like UJ is good to trade during rate decisions. Well, inflation data too, because the yen, like that's why my chart is like this. You can't see it on IG, but if you go on my YouTube, you can see it. But like you usually look at the dollar and then look at the US 10 yield when you're trading economic data. Because usually if the yields is pushing higher, that gives you expectations the markets is looking more towards hikes, right? But if you see the yields pushing lower, expectations the markets is looking more towards cuts. So usually the weaker the yields are, dollar will follow. And then that would strengthen the yen. So when you're trading US data and you're trading a pair like UJ, it's really good because the yen will typically do the opposite of the yields in the dollar. All right. How many trades do you take in a month? It depends. It depends on the month. Like I try to take like 1 to 2 trades a day, pretty much. Like today, I didn't take no trade, so it really just depends. Like tomorrow, it depends. It depends on the data, but probably I don't trade. I don't take a lot of trades. I don't do that. No tariffs on gold. It just doesn't give an edge. Well, it should push gold. Like it helps. Like you can see gold now is pushing gold lower. So that headline came out like last week, I think Friday or Saturday. So it just helps push gold lower. Usually the tariff impacts Switzerland because it hurts their growth. It hurts their economy. But usually for gold prices, it's not really going to do as much. It probably gave a spike higher, right? But other than that, it's not going to really do much. But if he put the tariffs back on, then that's something we're going to focus on. That should spike gold prices higher because it's back to supply and demand like oil. How do you incorporate conflicting signals between CPI and other inflation measures like PPI? It's the same thing. Like the focus is CPI. That's what the Feds actually focus on. Just inflation, they just look at other indicators. That's just all it is. It depends. Like CPI, they look at housing, food, rent, electricity. CPI is just other measures. Like knowing the details to it, and it doesn't really help unless you're like an analyst or something. But just to get a tradable opportunity, you just want to make sure that the print, like I showed you with the calendar earlier, if it's higher than expected or lower than expected, that's really what you really want to focus on. Oh shit, more questions. My bad, guys. I noticed there's a double bottom reset in the neckline. Is that a signal to buy gold? And nah, not really. I'll look at Asian session at 9 p.m. Eastern, and look at that look at that time for an opportunity. At least you get some volume. It depends. I don't like to just buy for no reason. Like look at the last video live I did on YouTube to help you guys like build the trading plan and stuff. GU tomorrow would be a lot better. Like it depends on inflation. Like inflation would set the tone for GU. So tomorrow should really set the tone for a lot of stuff. Is there a theory when manufacturing PMI and the balance of trade the previous reveals a weak USD? Same goes to CPI. There is a theory that when non-manufacturing PMI and the balance of trade previous data, yeah, it's like the reverse numbers, the revised numbers. Yeah, that's why Trump is firing everybody because they fucking up his data. we get bad data, he's firing their ass. But yeah, like the revised number, like NFP. So it was the revised number was really lower than expected, right? It was really bad. So that's what really set the tone for equities to drop during that. So we're probably going to see a lot of that, like a lot of revised numbers coming in lower. CPI, usually the CPI, they do a pretty good job with CPI numbers. We don't really see a revision on that. Gold is a safe haven against inflation. How will it react to a hot? Yeah, like you said it. So gold is not acting the way it did, like 3 years ago, because the times are different now, So when like this year though, I like to focus on like news headlines when I'm trading gold. I like to focus on headlines, like tariff headlines, war headlines, because gold is a safe haven, right? And typically like inflation is a good idea, or NFP data, sometimes GDP, stuff like that. You could focus on gold too. But if we get a hot CPI print, it's going to strengthen the dollar, strengthen the yields, right? Because expectations now for September's meeting is going to be a pause. So with that dollar strength, it should push gold lower. Okay. So the same for the opposite. Weaker inflation, weaker dollar, weaker yields, we should see gold push higher. So that's how you could look at it from that. Why are stocks falling despite, I don't look at it as falling, I don't look at it as falling. It's just, there's just no new reasons right now that is happening for NASDAQ to just continuously push higher. You get what I'm saying? So it's profit taking, right? We don't have any like clear indication why we should see NASDAQ push higher. It's been bullish for so long, probably if you just go to the daily, like you just go to the daily right here, you could just see how bullish, like it just been so high. We're at the highs, man. So try to give you guys a better view on Instagram. So we're at all-time highs. So that's the problem. And we just like, you just look at the daily, like you could just see the rejection of the highs. So to me, this is just profit taking. It's not really nothing crazy, but I understand that the truce, right? The 90-day pause, it's not a surprise. That's the problem. We already hear he's been saying that for a long time. So it's nothing tradable. If we see that Trump, or if we see that China goes against that truce, that's when the opportunity comes. Okay. But this is not new to the market. So the markets just don't care. That's why we're not seeing it. We're not seeing it rise. But to me, this is profit taking. And plus it's 4 p.m. and tomorrow is CPI. So that's why. Radit, I got you. What is your take on CPI? I explained it a few times already. Higher inflation, stronger dollar, weaker equities. Weaker inflation is going to be weaker dollar, stronger equities. Yeah, COT reports, they're good. It's good to know, but it doesn't really, if you want to add it to like your trading strategy, it's okay. What plans do you have if CPI data triggers an unexpected move? I mean, it depends on what you mean by the unexpected move. What you mean? I mean, you're just looking for a higher or lower print. You don't want to confuse yourself anymore. That's it. It's a higher or lower print. If inflation comes out higher, like I said, stronger dollar, weaker equities. Weaker inflation, weaker dollar, stronger equities. That's really all you're looking for. Like if it's not higher or lower, then just stay away. There's no edge, so it's nothing to force yourself to trade. What's up, Alawi? Trump said he won't put tariffs on gold. So yeah, I mean, it doesn't really make an edge, because it was a lie in the beginning. So it just doesn't really give an edge. Usually it's the shock factor of it. It doesn't really impact gold directly as much, but what it does, it impacts the Swiss economy. So this does help a little bit of Swiss economy. Like before, they was dealing with fear, right? So with this, you know, them pulling back on that, it reduces the fear. That's what matters. But for gold itself, you know, like I think it's just a good time. Like it makes sense, you know, profit taking at the highs, and now we're seeing bearish price action on gold. So tomorrow is really going to set the way for gold. Rather we see gold push up or down. Nah, like the indicators I use, just go on YouTube. The last live stream that I did on YouTube, the Sunday call should help you. It depends on the pair that you're looking for. Gold, like I said, it's just about inflation data. So if inflation is lower, it should weaken the dollar, and it should actually strengthen gold. Higher inflation should strengthen dollar, push gold lower. So it's no reason, it's no point to like draw like analysis for data that's going to be 24 hours from now, because the candles, we don't know where the candles is going to be, you know, so it doesn't make sense. But all right, guys, hopefully this was helpful. Have a good one.